Hey, what's going on, guys? Chris here. We're going to look at the daily overview with the SP 500. So, look at the SP 500 on the weekly. We are we're in this no man's land, and specifically also the weekly fair value gap. It's just a gap that it wants to fill. So, the target right now is here, and then weekly resistance 4280. So, this is an interesting zone just because uh, it's just been up. These are weekly candles, so it's just been up and up and up, and you kind of have to wonder, like, when is it going to get tired, and what's going to be the result after it gets tired. We haven't retested this weekly support, and a retest is a sign of strength because then we know there's somebody there buying. But when there is no retest, we have no idea if the buyer is there or if it's actually strong. And that's kind of why these down candles are called demand candles. But like, there's not so many demand candles. There was no demand candle here. It almost implies there is no demand here, in that it just kind of skipped it, and it's going to want to come back to fill the gap. And specifically, we also have a uh, 4 hour breaker that's untested there. So that's this area here, the 4 hour breaker that's been untested. It's naked, and it's gonna wanna. It's a huge magnet. It's gonna want to pull price down. So the higher it goes, the worse off we are because any kind of momentum that it decides to, okay, now the magnet is turning on, or it's now really strong, it's gonna just cause a lot of momentum to the downside, and that's the problem if we keep on going up. But and that causes fragility in the week. Like here, this is kind of what we saw on Friday. This is the soft landing scenario. If we close the week above, we have this soft landing scenario where the bottom is no more than 3,800. But the thing is, this is still the middle of the week, and that magnet is still here, untested. And if we keep on going really high on Wednesday, there's a huge chance it'll just want to nosedive into here, and that kind of momentum is dangerous. That's kind of my observation, and it makes sense that it's going to want to keep going up because it's going to want to fill the fair value gap. So that's just kind of my insight. I'm just with the institutions bearish on the Dow, they're bearish on the S&P 500. It's just something I don't want to fight against, but be on the side of the institutions, just because it just makes sense. Like any kind of, like, the fundamental side. There's only one strong point on the fundamental side. It's employment, but everything else is all fragile. It's all contracting. So it's just not looking good. Oil. Oil making a comeback in some way, but actually having some trouble here at this previous daily resistance. And who knows, we might make it all the way up here, but right now it's not looking good either. This support is now resistance here, or we could put a line there, either or, but it's not looking good. This is technically a weekly breakout right here to the downside, and this close right here broke that line. Now we're retesting it, and it's retesting pretty deep, but I expect it to decline and fall apart. Uh, the credit spreads, HYG, HYGH. So as far as like the credit spreads, things look like okay, but if we were to get below 75.56, it would be pretty bad. And like if the market kept on going up, yeah, it wouldn't be good. It means that they basically smell blood in the water. They have some proprietary information. The Euro getting rejected on the weekly resistance, so that's not good. It's a foreshadowing. Whenever the Euro goes down, it's correlated with risk on equities. It's usually implying that things aren't looking good, and we have a huge gap to drop for support on that breaker. I mean, you could technically say this is support, but it already tapped it. It already tapped the demand, so the next one is here technically. And then Japanese yen. Holding support. I mean, it's just coiling, and we'll see where we close the week. But looking here at our 12-hour thing, U.S. dollar finally retested here, pulling back, and this is probably where we're gonna get the huge spike up. Is the dollar pulling back for a retest here, and then to fill these gaps, and then we'll see if we get a really nice retest resumption throughout the week. But this week it looks like it's getting closer and closer to where it can't hold it together. I think that's kind of the credit market trying to function, the Eurodollar futures trying to function with what's happening. It's just the volatility and the uncertainty just really shows just the peril that's happening. Euro, we did not break the what's it called? The 12-hour market structure break. That's kind of what we're looking for. We're looking for a break on this 12-hour market structure break to signal, okay, risk off. It hasn't happened yet. And then this Japanese yen to signal to break down this market structure to signal risk on hasn't happened yet. So we're in this weird limbo, and it's saying that, hey, we're neither risk on, risk off, but the equities are speculating, or they're trying to fill that fair value gap. Whoever created that gap is trying to fill it and get out. That's what it looks like, and it's a short cover, and I think that's what's happening. And the VIX has just been coiling. We haven't broken the market structure, but it's looking like we're getting really close. It's either we get a really strong weekly close on this SP500, or it happens this week to where the SP500 starts breaking down, or the markets start breaking down. Looking at correlated risk on commodities, copper we broke down, so it's implying risk off on the 12-hour, and we're about to break down on lumber, which is also implying it's going to imply risk off once we break the 12-hour market structure break here. It's looking to come retest this zone, but that kind of move would signal risk off, just a huge change in trend. So two signals for growth are basically lumber and copper, and they're looking like they're turning around about face. And then VIX hasn't broken out yet, but it's looking to threaten to break out and break the market structure, break the bears. Japanese yen threatening risk off sentiment by approaching the highs, and it's got a huge jump it can make. So definitely something to take serious. And the euro just looks like it's putting in that swing failure pattern, left shoulder head deviation, right shoulder, really good point for defining risk. U.S. dollar coming back for a huge retest, signaling possibly the bottom being in strength. If it holds and retest resumes, then it's done. Pretty much the market will see some havoc from the dollar. And then looking here at the RSI, we probably will get exhaustion overbought. We were kind of waiting for this the Dow to catch up, and it has been. This was like 45 or 50. Now it's like 55. It's slowly picking up. We get to 68 on all of these. It's done. Everything is exhausted, overbought, and then it'll reverse. On the SP500, we're just carefully stalking this kind of move to flip. Once it flips, we're getting in, and we're letting it take its course. letting it think it's getting the best of us. I did not trade today, and then you could see that from my curve. I basically didn't trade for a couple days. 1, 2, 3, 4, 5. I'm waiting for a really good opportunity to get in. But today's price action after Powell spoke was just wild. I'm glad I was asleep during the time. But I was thinking we would actually go back and test that 4-hour breaker. Oh yeah, by the way, Japanese yen. This is a naked weekly breaker. It's looking to touch this. So that would cause a lot of risk off nature in the equities. And then this is not the one I want, but I could go to the one over here. But I was thinking that we were going to come back instead of having equal lows here, it was going to come back and retest this 4-hour breaker that it's naked and then go up, but it had equal lows here. It had equal lows on the 4-hour and then, or 1 hour, I don't know, and decided to take off. Right here, just some really volatile candles, and I'm just glad that I didn't go after it. I did have a short going in. I did have a short trying to aim for this level, but I had my bot put me to break even before anything bad happened. So I was targeting this, but didn't get it quite. So it moved my stop to break even, and the rest is history. I think it was on this point, and then maybe I got stopped out here. I don't know, but it looks like pretty much an equal low. It's around there somewhere. But this is kind of where I'm thinking we're targeting, which is up here around 42.40, around 42.45 roughly. So that's. And then we got another target up here all the way to 4,300. But 42.40 sounds like a really good place to start. 42.40 is basically right here. 42, the other line of estimation was like 4,300. That's all the way up here. I don't think we can touch it, but it's possible. That kind of move would be crazy, but 42.40 sounds the most realistic to me, to fill the fair value gap and retreat and close underneath this fair value gap line. And things being exhausted, they'll want to reverse. And I think that's pretty much it. We'll get these lines turned on, so then if there's any new ones, I can chart it. But right now, this is kind of the balance we got. And, and then that's pretty much it. Videos to come. Charles Schwab Thematic Portfolio for Robot Revolution. This has been on here for more than 2 months. But, with the whole chat GPT getting really popular, I could see how this would be really interesting to get into. Trade plan after the dip. I've just been so obsessed with just the crash, or the landing around 3,200, that I haven't been able to make a trade plan for the bullish side yet. And then video about entry alpha for investors. That's to come. It's pretty simple. Buying at like quarterly demand, and you just pick like a slow and a fast, like a near and a far, and that's it. It's pretty much it. But I go in more detail in using other tools like Anchor VWAP, or like quarterly or yearly Anchored VWAP, just seeing where the average price or position that people are at, or investors are at, to determine, is this a place you should buy? Okay, this is where the average quarterly investor is at for an entry, and you're going to shoot below that. So that's like another kind of example. But that's pretty much it. Went over the daily overview, gave some secret sauce just on looking at what had happened throughout the day, what I'm thinking, and what the institutions are thinking, and what's happening in the currencies in relation to the bonds. Bonds are totally inverted, so you don't really need to look a whole lot. All the important indicators for recession, for inversions, they're all inverted. Like, so basically we're seeing now in real time the currencies in that kind of reflection. And if we break down on the euro, it's more likely we'll be risk off. And if we we're holding on the yen. If we broke down on the yen, we would be risk on. But we haven't seen it break down yet. It's flirted with the idea, but it's not really broken down. So that's kind of just it. It's more fragility than optimism, because you want it to come down so you can be optimistic. Anything that's just too strong of a move is suspect. And that's what's happening. We've only gone up for weeks, like multiple, like more than 5 in a row. So anything like that is like not really healthy. And there is no real demand being put in because there's no retests happening. And all that's happening is these naked breakers that are huge magnets to want to pull price down. And that's what I see.